This is On The Charts with Nick Radge, your Australian stock market update, highlighting stocks on the move so that you can invest with confidence and success.
The information in this podcast is general advice only and does not take into account your personal situation. Please consider if it is appropriate to you and consult a licensed professional before making any investment decisions. The information provided is believed to be accurate at the time of recording.
Welcome to the On The Charts podcast, episode 193 for Thursday, 11th of May 2017. Overnight, the Kiwi Central Bank kept interest rates stable but stated they intended to keep them at record low levels for an extended period. Kiwi dollar slumped 1.5% on the news, and one gets the impression that the Australian economy is tracking the same path. In the US, not a great deal on the surface of the main indices, but there was certainly some big moves in individual names. Nvidia shares jumped 17% on back of its AI advancements. Crocs leapt 17.4%, Yelp fell 18.3%, and in news after the close, Snapchat shares lost 25% in aftermarket trading. In other trading, crude oil swung higher again, adding 2.5%, and Mark Mobius, the emerging markets fund manager from Templeton, suggested the cause for record low volatility across global markets has been caused by social media. He believes the speed of information enables it to be discounted quickly, and that much of it is actually false. Sounds pretty familiar, but it's also interesting as many hedge funds now employ algorithms to read and interpret social media feeds to gain an edge. In Australia today, the session started with numerous analysts slashing the outlook on retail stocks, mainly due to the impact expected from Amazon entering the fray. Both JB Hi-Fi and Harvey Norman had their long-term earnings cut by up to 40%. Vita Group plunged 30% even after the company announced record earnings. Investors, however, are concerned about the changes in the Telstra network, which will adversely impact the business. And Qantas, which we mentioned yesterday after it tanked 40%, fell another 25% today, although at one stage it was 40% lower on the day. CSR was also downgraded as well after yesterday's earnings release. Its shares continued to lose ground, falling another 4%. GrainCorp was a solid performer, however, adding 8% after it upgraded earnings guidance. Broader indices showed some nice early strength, taking the ASX 200 over the 5,900 level again, but the gains were unable to hold. From these early rises, the market went into a slow reversal and by late afternoon had tagged negative territory, and at the close, the main markets were more or less unchanged on the day. A few stocks that have taken my interest lately, the first being Link Administration, and the code there is LNK. The company is a provider of software services, namely providing shareholder services and superannuation fund software with clients including Australian Super and Host Plus. Its fund administration business is well positioned to continue to provide cost-effective and value-added services to the ever-growing superannuation industry. A recent announcement that one of its prominent clients may merge with competitor Sunsuper has caused some short-term doubt, but as the industry continues to consolidate, Link remains a market leader. Technically, there's not a lot of data. The company first listed in late 2015, around the $7 mark, and traded to a peak around $9 in mid-2016. It's fallen back to the initial IPO price, with the last 6 months tracking in a sideways range, forming what appears to be a nice basing pattern. Prices have broken out of this in the last few days, which is why it's hit my radar. The measured move for this upside break is equal to the depth to the base. In this case, it should return to around the $8.60 mark, and hopefully if it starts to do so with rapid momentum, potentially contest the all-time highs. Another stock offering some bullish posturing below a stiff level of resistance is St. Barbara. The company is a gold producer and mineral explorer operating out of Papua New Guinea. Recent gold production showed strong grades continue at Gawler, and its Simbari mine is setting production records well ahead of analyst expectations. The company has a compelling short-term cash flow and enjoys the luxury of being one of the industry's lowest cost producers, but could also be a takeover target. Technically, the price action has been underwhelming since late 2016, albeit in recent times has attempted to make upside headway. The nature of the recent strength, however, doesn't bode well for it to be sustainable. Should an upside break occur through that $3 barrier, it's more likely to carry prices back to the all-time highs at $4, which in itself is a worthy gain, but from there is more likely to track in a larger and broader consolidation pattern, probably lasting many, many months. Only after that consolidation would we expect a new trend to be established and a move onto new high ground. Now, to close up today, did you know that volatility in global markets is actually at the lowest level since 1993? And the one thing I've learned over the last 32 years is that high levels of volatility will tend to follow, which means something big could be brewing. But the question is where and how do we profit from it? Well, starting Monday here at The Chartist, we're going to try and answer those questions for you. The same team that called the top of the market in 2007 and then called the low in March 2009 are bringing you their super long-term views of all the world's markets. Each day we'll discuss several different markets and a lot of the Australian blue chip stocks as well. This is big picture stuff, but only available to members of the Chartist Pro. If you're not a member, head over to thechartist.com.au and join our 2-week trial. And remember, Special Report Week starts this Monday exclusively to members of the Chartist. My name's Nick Radge. I'll see you on the charts tomorrow.
On the Charts with Nick Radge, brought to you by The Chartist. Join Nick and the team at Noosapalooza Trading and Investment Conference, 20th and 21st of July in beautiful Noosa, Queensland. Visit thechartist.com.au and click on Noosapalooza in the menu for details.